Today we want to talk about FHA mortgage insurance premiums. Now you may have heard around that there's going to be some changes, but we want to talk about the specifics. Before we do that, I wanted to give you some history of what FHA mortgage insurance is all about. FHA mortgage insurance came about in the 1930s when banks were only able to lend because of their risk that they felt was too high. They were only going to lend up to 80%, sometimes even lower than that, of the value of your home. So if you're buying a $100,000 home, they would only give you an $80,000 loan. Well, the government came along and said, hey, you're keeping too many people out of the process. So that's when the government came into play with FHA mortgage insurance. Basically, FHA is nothing more than that. They insure the loan for the first 20% of the loan, so that if somebody walks away from it, the lender, the bank, will be reimbursed for that first 20%, so their risk isn't as high. So that was the one way that banks decided, okay, well, now we're going to start lending up to 97% at the time. And since then it's changed from 97 to 96.5%. So that's mortgage insurance. It's on one side, it just allows us to get a loan when we don't have a big down payment. So good or bad or otherwise, it's something that we have to live with. So now where is it? Well, FHA mortgage insurance had been at a fairly reasonable rate. When times are good, people don't walk away from their home, and therefore the insurance pool that FHA keeps was keeping fairly steady. And during this recent foreclosure crisis that we've gone through, the pool of insurance, obviously when you have a lot of claims because people are foreclosing, you have that money going out of the pool. Well, FHA had to do something to try to reimburse that pool or keep it up to where it needs to be. And so they recently, about a year ago, raised their mortgage insurance premiums, which in effect became about, say on a $200,000 loan, you were going to be paying about another $80 a month in mortgage insurance, somewhere in that vicinity. Well, now they're raising it again. As of April 9, any case number that's pulled after that, and case numbers are generally pulled when a loan is going, we've got a contract and we're going to go to get the appraisal. But when that case number is pulled, if it's pulled after April 9, you're going to be paying this new mortgage insurance premium. So it's going, the upfront mortgage insurance, which is a part of every loan, and it was allowed to be rolled into the loan, by the way, is going from 1% up to 1.75%. That's a big increase. With a $100,000 or $200,000 loan, that's about $1,450. The annual premium, or the part that you pay every month, is going up as well. It's going from 1.15% of the loan per year to 1.25% of the loan per year. So then what they do is they take that amount, they divide it by 12, and that's what you pay every month as part of your monthly mortgage insurance premium. So unfortunately, it is going up. There's just nothing we can do about that. If you're in a position and you're looking for a home, it would be a good idea now to try to get under contract before that April 9 deadline comes along. However, FHA has thrown us a bone. FHA is basically saying now, because they want to stimulate refinance activity, that they are dropping their mortgage insurance rates for any FHA loan that was taken out before May of 2009. What they're doing is dropping the upfront mortgage insurance premium down to a measly 0.01%, very, very small. And they're dropping the annual down from 1.15 to 0.55%. So your mortgage insurance premium is going to be lower. Your interest rates are very low. So if you have an FHA loan, you can do a streamlined refinance. Now, this is not going to come about until June. So it's not that we can do it right this minute, but be prepared so that when that time comes, you can take advantage of the low rates and the much lower mortgage insurance premium. So we've got two sides of the sword here. One is a good thing that we're lowering the rates for refinances for any FHA loan before May of 2009. Streamlined refinance, by the way, that means no appraisal, no income verification. So it's a very easy loan. Even if you're upside down, we can do that loan. But the other side is if you're buying a house, it's going to go up, so you might as well get prepared. Anyway, thank you very much. And if I can help you, or if Joel can help you, please feel free to call us. Thank you. Bye-bye.